Hi everyone, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, July 9th, 2019. We are just entered the last hour of the trading day. As you know, in my opinion, the prices that are as close to the close of the day are the most valid prices of the day, and therefore the best prices to make my buying and selling decisions from. So anyways, it's been kind of an interesting day. We opened up much lower. We've had a nice comeback, which is good. Let me just make sure that everyone can hear me. Hey, I think they can. Hi, David Gordon Russell. I'm doing well. How are you, my friend? How are things going? Hey, appreciate you coming by today. Hey, and there's William. Hi, Greg. How are you? I received your message, and as always, you are great at putting things in perspectives. Oh, well, thank you, William. I appreciate it. I hope that made sense. If you have any other questions about that, you just ask me during the live stream. But, on that particular stock, as we can see, that's exactly where, at least intraday, that's exactly where we did hit resistance. But I'll go over that further. Hi, Andy. Hey, good to see you. Andy says, I missed yesterday, but I'm ready for today. All right. Well, I'm ready for today as well. So, all right. Well, we're having kind of a mixed day. We have some things up, some things down. But that's just how trading goes, right? It's not always just up. And when things go up, it doesn't make you a good trader. What makes you a good trader is when you get frustrated and things go against you, or you make one step forward, one step back, one step forward, one step back. And how you conduct yourself in your trading during those frustrating times is really what's going to determine what kind of trader you're going to be in the future. Hey, Mount Doji, good to see you, my friend. Hey, nice Twitter trade. You got to point that out to me next time before the market closed, because I would have taken that for sure. I would have taken that trade. That was the best trade. That was the best setup of yesterday for sure. So, okay. So the plan for today going forward is, first of all, we're going to run the U.S. legal disclaimer. Second, we're going to come back. We're going to go through all of my current positions. We're going to take a look at when I bought them, why I bought them, and how I'm going to manage them going forward. Then we're going to do just a few minutes on some trader psychology. Then we're going to come back and we're going to go through each stock in my watch list. We're going to go through one by one. We're going to take a look at the technical levels. We're going to analyze support and resistance levels. We're going to analyze price action. We're going to analyze moving averages, RSI levels, possible V1, V2 triggers, ATR channels, all the stuff we do each day, and see if there's anything that we might be interested in at the end of the day. So that is the plan for today. Oh, and then at the end of the market, when the market closes, if you have any questions about anything I discussed today, please don't be shy. Just go ahead, type them in the chat, and I'll do my best to clarify and answer your question. Or if you have any stocks or symbols that you're interested in, like Mount Doji did yesterday, please let me know that as well. So, all right, I'm going to run the legal disclaimer. I'll be back in 40 seconds. So hang tight, please. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Well, let's get right to it then. So I did buy IWM, which is the Russell 2000. I did buy it back here on the 28th of June, and I bought it because the 10-day simple moving average crossed over the 50-day simple moving average. This is one of the best long-term back-tested systems for the Russell 2000. And so I did enter the trade when the 10 crossed above the 50. So if you're trading this mechanically like I am, I'm totally trading this system mechanically like a robot. I will stay in this trade as long as the 10 doesn't cross below the 50. If it does, then I will go ahead and exit. That will be my stop. Or if it goes my way, I'll continue to get out, phase out until I am out of shares. So I did buy it back here on the 28th. If you remember correctly, guys, even though this was a mechanical trade, I did only enter a half a position here. And the reason why is because we had 2 strong days up, which by itself doesn't, that's not a game changer as far as me having a full position or a half position or a full position, but it did have 2 days up. It was right up against the previous high. I mean, not right there, but it was getting close, and it was above the second ATR channel. So it felt a little high to me. And so even with my mechanical trades, I can and do vary my position sizing depending on when the entry happens. If it would have happened back here in the value zone, as you know, I like to buy things in the value zone. When I start buying up here, it makes me a little bit tentative because I know most prices stay below the third ATR channel or above the negative third ATR channel. So I did want to go ahead and take this trade so I have something in case the market trends, but I only took a half position. So, we did hit 2 profit targets the very next day, which helped. We took some of the shares off the table, but really since then we had another one here, but since then it's kind of been moving sidewards. So and it was a good idea actually to take half position. So we'll see what happens. It is down a little bit today, not much. That is my entry point. So, we are net negative on this trade, but we did mitigate a lot of the loss because we got out of about 25% of our position up here. So going forward, as long as the 10 stays above the 50 SMA, I will continue to stay in this trade, phase out on the way up, or exit the trade if the 10 crosses back below the 50. So that's the plan on IWM. All right. And no profits targets today on IWM. All right. All right, so here's PayPal. I did buy PayPal back here on the 28th of June, and I bought it because we had a move higher. We moved back down into the value zone. Then we had this V2 right here. We had this V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. That was my entry point. My initial stop would have been a close below halfway of this washout bar. This washout bar halfway, that's the important level. So I did enter here. Next day it gapped way up. We got out of some shares, moved down, gapped up and went up, phased out some more. And then today having a nice day as well. Took out this fractal, which is also always important. But we were already in the trade from down here. So this has been a great trade. We did hit 1 profit target. We'll see if we can, if we're lucky, we hit the second profit target today, but we'll see. But it's been a really good day. And this has been a really nice trade. This has been so far from entry to where we are, 3.32%. So, the key is when you have your profits, be open-minded with them, let them run. I know, somebody could probably talk to themselves into taking it here or here, right? But the key is you got to get that plan together, and you got to be really patient with your profits. Be open-minded with your profits, right? And be fearful with your losses. Most people are the opposite. They fear when it goes up their way, and they get hopeful when it goes below. If they have a loss in the trade, they're like, well, I think it'll come back. They get hopeful. You want to be completely opposite. You want to be hopeful when it's going your way, open-minded, and let it have some patience with it. And when it goes your way, that's when you want to be fearful. But 90% of the traders are completely the opposite way. So don't be one of those traders, because those are the traders that lose money. I mean, if 90%, 88% of traders lose money, you probably ought to do opposite of what they do, right? I mean, it's just logical. Do what the 10% do, or do what the 12% do. And I promise you, what they do is they are open-minded. They let profits run, but they hurry and get rid of those losses quickly. So we have been open-minded. We've kind of gone up and down here, but you can see it was worthwhile. So on PayPal now, we're 62 RSI. If it, intraday, if it goes above a 70 RSI at some point in the future, closes back below, that will be my trigger to just lock in profits. And on the downside now, where would I trail this to the downside? And I would have to say probably the 5-day. A lot of times I will use the previous day's low as my stop, but I don't want to let it come all the way back down here. And this 5-day EMA makes a lot of sense. It is actually at the halfway of this bar. So tomorrow, if we close lower than halfway of that bar, that's not a good sign anyway. So this 5-day EMA right here makes a lot of sense as my trailing stop. So a close below the 5-day EMA will be my trailing stop. But if it keeps going our way, I'll continue to phase out until we hit the 70 and lose that 70. So that will be the plan with PayPal. Mount Doji says, thanks, Greg. I literally did not see Twitter until a minute before the close. Glad I was able to catch it, though. Wouldn't have been able to without your helpful guidance. I'll speak up earlier next time. Okay, that was a great trade. I remember when you showed me that, I was thinking, dang it, why didn't I take that? I'm like, oh yeah, it's not on my watch list. So anyway, you're having a great day on that, buddy. I'm proud of you. Let's take a look at it real quick. Yeah, looks good. Mount Doji took it yesterday. We had this V2 here, higher low V2. Went down, tested below the 50, decided it didn't like back up there, went back above the 50, went and triggered that V1. I think you bought it yesterday, though. Yeah, you bet it yesterday. And it took out that fractal yesterday, too. And big, huge day today. So congratulations on that. And, let us know how it goes. Let us know how you're managing the trade going forward. All right, so PayPal, we got that out of the way. SPY. So SPY has been, the overnight SPY trade has been a bummer the last few days. 4 days ago, we bought here, sold here, bought here, sold here, bought here, sold here. Not so good, right? So, but that's how it goes, I mean, the month of June, it just went up and up and up and up and up overnight. So, but, we have to come back to reality and realize that these approaches long-term do have an edge and they do make money, but it could go down for a month like it did in May. But in case we have some new viewers today wondering what I'm talking about, I do buy the SPY every day at the end of the day and I sell it first thing in the morning. And so why would I do that? Well, this is from Lizanne Saunders. She's the chief investment officer at Charles Schwab, and she reposted from @Bespoke Invest. But since 1993, buying the SPY, the SPY, in the morning at the open and selling it at the close in the afternoon, if that was your approach, buy in the morning, sell in the afternoon, since 1993, you would have actually lost 13.9% doing that. But if you did the opposite and you bought the SPY at the close at the end of the day and you sold it first thing in the morning at the open, you would have actually returned 634.2%. This is from 1993. So you can see there's a huge, huge difference between the two. And what this shows you is more than all of the returns in the S&P 500 since 1993 have come from the after hours and the pre-market activity, and then they were sold into at the open. So that is why I buy the SPY each day at the close and I sell it first thing in the morning. This is up till June of 19 and the return was 634.2%. Stephen Burns did a more recent study about 2 weeks back, and his more recent study, actually the buy in the afternoon, sell in the morning, was up to 712.63%. So, it's a good long-term approach I do it every single day, but there are ups and downs. You can see, you have nice run ups and you have big drawdowns. You have nice run ups, you have big drawdowns. Some of these drawdowns were over a couple years, right? So, if you're buying and holding, there's going to be a couple years where you have down or a year where you're going to have a drawdown, but you have to look at the big picture and know that this really beats buy and hold, and it really beats buying in the morning, selling in the afternoon. I mean, this line down here, this is the movement in the S&P from the open till the close. So you don't get a lot of movement. It's clear that the movement comes from after hours. So that being said, it's a good, proven, powerful long-term approach, but you want to position size properly, maybe a 5% position size, maybe a 10% position size, and then do it, and then I do it every day. I mean, there's some days where I'm like, I do not want to take this trade because just in my gut, I feel like, oh, this is not going up any further. But, it's my plan, so I stick to my plan. So anyway, with that said, we did buy it yesterday again at 296.82, and we sold it right at the low this morning, 295.50. So that's just how it goes, but I will be buying it again today for sure at the end of the day. All right. VIX. I did buy VIX yesterday, and why did I buy it? Well, the previous day, we were below 30 RSI. We closed below the 30 RSI, and we also closed below the third ATR channel. The next day, which was yesterday, we closed back above the 30 RSI, and we closed back above the third ATR channel. So the market decided it did not like these low prices here. And, this gives me a good setup on the trade because now I'm back up into the third ATR channel. I'm back over 30, and it gives me a good level below me. So right now we're at a 36.31. So, if it closes back below 30, I will go ahead and I will just get out of the position. That's as simple as that. Or if it goes my way, I'll just phase out. You can see had a big opening, hit 2 profit targets on VIX this morning, and then it sold off. It's about break even right now. Well, I guess it's up a little bit. But I did get out of about 38% of my position just on that gap up. So, that's good. So I will continue to hold this trade until it closes back below 30, or until I phase out and run out of shares, or until it tests the 50 RSI up here. This is the blue up here, 2620. If we keep moving up and I test that 50 and it rejects it, then I'll also go ahead and lock in profits there as well. So hope that makes sense. I was really patient on this, waiting for this, but and so far it's worked out. Verizon. All right, so this is the big stinker of the day. Boo. But it does have a silver lining, and the silver lining was I only took half a position on this trade. So I did enter the position here on July 2nd when we had this major shift. We had this big momentum bar to the upside, had a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above. Now, this was a big bar. I realized this was a big bar, but in case it continued to keep moving, that's why I only bought a half a position. I was waiting for a close that would be just slightly over halfway to enter the second half of my position, but it never came. Like, it closed up here, but it wasn't. I wanted to see it test that 50% of that of the big bar on the entry bar, because that 50% fib number should hold some intrinsic support. Well, it didn't, and as you can see, down today. So I certainly will be exiting this position here. This was a bummer, but like I said, on the bright side, it was a half a position, and it's a good lesson. When you have these big, huge up bars like that, I know they're tempting to get in. Sometimes they work out, but that's why I generally buy half and then try to add my second half somewhere around the 50% mark. And we did hit a profit target or so up here too. So we were able to take some profit at a higher price and actually lock in some profit. So it mitigated the move down. So yeah, this was a big puke today. That's just how it goes. My feeling is that it went down here, it tested this level for a while, but when the market found out it was not going to hold the 50% of that, everyone just bailed. So, and I will be bailing too at the end of the day for sure. So, so that's about it. IWM. Going to stay in this as long as the 10 stays above the 50 or until I phase out of all my positions to the upside. PayPal hit the one profit target down here, got in with the V2, so that's been a nice trade. SPY, going to be buying that again at the end of the day. VIX is the one we just went over, so as long as it stays above 30, I'll be continuing to hold VIX, targeting the 50 RSI, and then Verizon is our big stinker today, so we'll be getting out of Verizon. So that is about it. Oh, and Etsy, I did sell a put on Etsy back on June 28th at the $55 level. Basically, as long as the price stays above the $55 level by this Friday, I will get all the premium from selling the position. So I actually got out of it today with about 95% of my premium, because you can see it's actually moved up really, really nicely since I've sold it. But real quickly, the reason why I did sell the $55 strike price is I like to see a strike price that lines up with some kind of support, some kind of technicals at the same time on 3 different time frames. So on the monthly, the $55 mark lined up with, we're above the 1 ATR channel, so there should be some intrinsic support there, at least initially on the monthly. On the weekly, when I wrote it, it lined right up nicely with the 50-week moving average, so that was a second confirmation. And then on the daily, the $55 mark lined up with the 250 day moving average and also the 30 RSI. So that's why I was confident to go ahead and sell these puts on Etsy, and it's worked out. So like I said, I did get about 95% of my premium. So I am out of options. I have no options at this moment. So have to be on the hunt for some options coming up here. Johnny says, I missed it, but I tried, did not chase it. Oh, on Twitter, Johnny? Mount Doji, looking forward to when you talk about IBB on your watch list. Okay. Hey, Scott Montgomery, how you doing? Good to see you, my friend. Thank you for coming by. I really appreciate it. All right, well, let's take a look. Oh, let's quickly I think I've shown this one before, but it's worth seeing again. It would be worth you guys reading this to yourself 10 times a day, every day. But this is from Rayner TO at Rayner, RAYNER_TO. He has a really good channel on Twitter. He posts some really good information, really good things on psychology and trading. So I would recommend that you subscribe to him. I think it would be worth your while. It's good information. But here he says, advice to new traders. And this is what we talk about all the time. You're not going to get rich quick. Don't hop from system to system. Have a planned exit for every trade. Limit your loss to a fraction of your capital. Your entry is only a small part of the equations. The early years are for learning. Profits come later. I mean, these are all so true. And, these, like I said, these are the things that I, talk about every day that I really want to, get through to everybody, especially new traders, because you are not going to get rich quick. Trust me. I see all these ads for these get rich quick trading things. I just laugh because, there's no free lunch in this world, right? I mean, in order to make a lot of money, you've got to risk a lot of money. So if you're okay with huge drawdowns, well, yeah, I guess, you can make some pretty big hits, but it's at the risk of losing your trading capital. If you lose your trading capital, blow up your account, how are you ever going to become a good trader? Right? I mean, to be a good trader, you have to have experience. To have experience, you have to stay in the game. And to stay in the game, you have to have capital. So don't fall for this stuff, everybody. I know it looks appealing on the ads, but it's just not like that. You think the big Wall Street traders, hedge funds, you think they just can get rich quick on some little setup? No way. So you're not going to get rich quick. Just Get that thought out of your head. It's going to take a long time. It's going to take years. Not honestly, not to learn the setups. It's going to take years for you to master yourself and your emotions. So don't hop from system to system. There's a lot of good systems, a lot of good approaches that work long term, like our overnight spy. But just imagine if you started the overnight spy 3 days ago. Doesn't look so hot, right? You might say to yourself, well, screw this. I'm going to try something else maybe that works better. You might hop off at just the wrong time, hop onto something else at just the wrong time. But, if you have a good, solid trading approach, stick with it through the good and the bad, but don't hop from system to system to system. I know so many people that do that. Have a planned exit for every trade. Of course, we talk about this. You do. You have to know exactly where you're getting out when you're wrong, and you have to know actually to the upside where you're getting out as well. A lot of people, kind of as an aside, if somebody says, oh, hey, you got to buy XYZ stock, somebody just tells you that, don't even pay attention to it unless they specifically tell you, as long as it stays above here or exit up here, you got to have an exit. Most people, once they get into a trade, they fight with themselves about, where do I get out? Where do I get in? It's a lot of mental work. And it gives a lot of anxiety. It's just so much easier when you have your trades planned out. If this happens, I'm going to do this. If that happens, I'm going to do that. Limit your loss to a fraction of your capital. All right. Well, that's why I always talk about taking small position sizes, 5% of your capital, 10% of your capital. I use a 5% emergency stop. So really in the worst case scenario for me, I'm going to lose 0.25% of my capital on any one trade. And so, very important, especially when you're learning, just limit those losses to a very, very small part. Your entry is only a small part of the equation. The entry is the easy part. Like I said, once you figure out the technicals, you figure out your setups, that's the easy part. The big part comes from the emotions, battling your fear and your greed and your wants and your desires. I mentioned yesterday, trading should be really boring. It should be a grind. It should not be exciting. If it's exciting to you, other than when you very first start and figuring it out, you're probably trading too large. The early years are for learning. Profits come later. It's absolutely true. The early years, you're gonna trade your worst. And I always recommend to new traders, they start out with a really small account or a small percentage size, because you're going to be your worst trader in your early years, and you're probably going to lose the most in your early years. So it's better to do it with a smaller account size. So anyway, again, this is from Rayner TO at RAYNER_TO. It's a good site. Recommend going to it and subscribing to it for these kind of daily psychology post. He does a really good job with that. All right. Oh, hey, Steve Burns is here. Hey, Steve, good to see you, my friend. Thank you as always. We're always excited to have you in the group. It's an honor. Steve says, trying to get rich quick is the fastest way to go broke. Oh man, I got to copy that and do something on that tomorrow. It's true. Trying to get rich quick is the fastest way to go broke. It is so true, Steve. Thanks for saying that. Compounding capital is the path to building wealth. That's right. And you can't compound capital if you're not in the game over time. You need time to compound. And Steve says, entries don't make money, only the right exit. That's right. Everyone's focused on entries. Exits are where it's at, everybody. I mean, Steve knows I'm obsessed with exits. I'm obsessed with them. Because you can take two people, one person, they can both enter at the same time, and one person makes money and the other person loses money. How does that happen? Well, obviously it has to do with the exits. So yeah, good advice, Steve. Really, really good, poignant advice. Thank you. Hope you're doing well, my friend. I guess we're going to be watching AGQ later today at the end, huh? It's been pretty close. So, all right. So let's take a look. All right, well, let's start going down through the list and see if there's anything that's looks interesting today. So Apple had that big sell-off yesterday on some of that news. The bar looks this big, but the bar is actually this big. It's from 2 days ago's close. That's how big the bar is. So I don't, as you know, I don't like getting in front of big skyscraper bars that are larger than one ATR, and this one is about two ATRs. So nothing for me on Apple here today. If this can settle down here inside the ATR channel, give me a good V1, V2 entry, I might consider it then, but nothing today. All right, so here is AGQ. That's what I was just talking about. There is a good, if I could type this in here. All right, so there's a good back-tested approach to trading silver. This is AGQ. This is the double leverage silver. It's a good, profitable, back-tested approach. And the approach is when the 5-day exponential moving average crosses under the 20 exponential moving average and then crosses back over. So right now, the 5 reading is at 23.99. The 20 reading is at 24.01. So we are under. If it closes back above, actually equal to, even if it closes equal, the ETFreplay.com, it calculates numbers based upon that. So if these close equal at the end of the day, I will be entering a half position in AGQ. AGQ is double leverage, right? So I would only enter a half position, which would give me a normal position. So we'll watch AGQ at the end of the day, but the 20 and the 5 are going to have at minimum at the same readings. All right. Well, Advanced Micro Advices had a really nice day. Did trigger that fractal yesterday. I didn't take that. It was a little high. I'd rather have it be down in here, but nonetheless, it did move up nicely. We're at a 65.96 RSI. So if any of you have that, congratulations. That's turned out to be a really, really nice trade, but nothing for me on AMD. Amazon, another big day up here. My gosh. It's at a 70.08 RSI. If I were in this trade, I would be exiting this trade if it closed below the 70. Let me show you. So now if you would have traded this mechanically, see here's the 550 SMA crossover. I did enter here. Now, if I would have traded this completely mechanically, I would have had it up here, right? So it would have been nice if I had, but I did not because I did enter here. Next couple days, it went up. It rejected the third ATR channel and closed back down. And then we had the Fed meeting in the next day. So I figured it was good enough time for me just to take a 2-day trade. So, but this goes to show you sometimes when you trade these things discretionarily, you'll get out, turns right back around, you look like a genius. Other times you get out and it just continues to go your way. So, but these moving average crossovers are a really good approach, especially for someone that just can't sit and look at the computer all day. There's not a lot of entries. They're quality entries, but there's not a lot of exits. There's basically one entry and one exit. So anyway, this crossover has worked out really well so far. So nothing on Amazon for me today, but in case anybody has it, really glad that's working out well for you today. Boeing, well, Boeing lost the 200-day and it is just continuing down on the stairway down to hell here. I mean, it thoroughly rejected that 200-day, sliced right through it like a hot knife through butter, and it's just moved down, 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 down. So where would I be interested in Boeing? If we moved up, came back down, made a higher low, V1, V2, then broke back out above the 200, that might be interesting for me. To the downside, if we got down to like a 30 RSI level, probably somewhere down in here. As a matter of fact, let me just take a look real quick and see where the 30 would be, just to get an idea. Oh, right where I have the line written already. So maybe down in here. Maybe down in here, depending when it gets there, I might be interested, but certainly nothing on Boeing today. Alibaba. So I did want to point this out, because I'm always talking about making higher highs, coming back down into the value zone, looking for a V1 or a V2, right? So, well, it's done this, right? It's moved up, it's moved back down into the value zone. This is a V1, but you have to remember this bar looks small, but it is not small. The previous day was up here. The close of the previous day was up here. So really, this bar, honestly, is this big. And remember, we don't want to take V1s, V2s up against a bar that's larger than 1 ATR because it shows that there's a lot of selling pressure. So this is a good example of always mind where the gaps were before this bar started. So normally, this looks like a legitimate V1 with the small bar back in the value zone, wash it out, reverse back up, but it is not because the true range of this bar is this big. So not interested in Alibaba, but I thought that was a good example to show everyone. These V1s, V2s have a lot of small nuances to them. Hey, Dr. Jorgensen's here. Sella put at Boeing at the 30 RSI. Yeah, actually, I didn't mention it, Bruce, but I was thinking in my mind, I was thinking the exact same thing. I was thinking I have to go back and take a look and see what those premiums are. Caterpillar moved up nicely, moving down in an orderly fashion. Now we're getting down into the value zone. So, this has been kind of on my radar to wait for this to get into the value zone. I'd like to see another day sidewards at the very minimum and then a spike down, reverse back up with the V1, V2. And the cherry on top of this would be when that V1, V2 rejection happens, that it rejects the moving averages and closes back over also. So, another move here would be the RSI possibly being in the 50 RSI range. If we had a 50 RSI lining up with a 200 V1, V2, that would be an excellent spot, but nothing today. Canopy growth. We pointed this out last week. This was another one of those big strong bars. I did not take it because the 50 RSI was right above, and so my risk to reward was horrible. Not much reward, lots of risk. I was waiting to see if this would come down, test the halfway of this bar, and then close back above. That would have been my entry, but you can see yesterday it closed below the halfway, so I didn't take the trade, and good thing we didn't because this has been a one-way trip on the downside here. So nothing on Canopy growth today. JT, hey, how you doing? Good to see you. Thank you for coming by. JT says, how about a risk reversal on BA? JT, what do you mean by risk reversal? Just so I know exactly what you mean, because I'm not quite sure I'm clear. All right, I'm going to keep chugging here, and then I'll take a look, see if you guys responded. So, where were we? Cisco. So Cisco, nothing really going on Cisco here. DDM, we're coming back into the value. So like with many of these stocks, I'm looking for it to come back into the value before we make another purchase. So nothing there. This is a good example of a good mechanical back-tested system where you stay out of the DDM below and you get in above. We did enter back here on June 6th when we had this strong close above the 200, and you can see it's moved up nicely. We scaled out, moved sideways for a while, scaled out, and I scaled out the rest of my position right here. So but nothing on DDM today. Walt Disney. Well, okay, so that is a V1, right? We did make a higher high. We came back into the value zone. We did have a V1, but the way I was trained on V1s, V2s is I hesitate to buy a V1, V2 when it's this close to the 1 ATR channel. Kerry Lavorne, who taught me this, right about here would be his maximum. He would not buy this high, and I think it's a good policy. So I'm not going to buy anything, even though that is a V1, V2, because it's just too high in the channel. I'd like something in the channel like our last trade when we had this V2, day 1, day 2, day 3. Day 2 washes out day 1. We triggered here, gave us a much better risk to reward ratio, and we all the way up here. So that was a great trade. Etsy. So Etsy is looking kind of interesting today, actually. We had a 520 moving average crossover. We have a MACD, bullish MACD cross today, which is also positive. This is one of those kind of big bars, so I am considering buying this today. Only a half a position though. Only a half a position because of this big bar. Whenever I feel like I'm chasing a little bit, but I like the context, I'll go with the half position. So I will be buying a half position at Etsy based upon the MACD crossover, the move above all the moving averages, move back over 50 RSI. So I will be buying a half position. Oh man, I only got 20 minutes. All right, Ford, nothing on Ford is coming back into the value zone. We need to look for a V1, V2. Facebook, boy, big strong day on Facebook today, but it's too high for me. 5 below. William, I talked about this earlier, and I didn't take this yesterday because, you know, we had the 1 ATR channel and we had the downward sloping 50 moving average. I felt like that was going to act as resistance. You know, the theoretical reward on this really was from here right to about where it went. And that's the same distance as my stop would have been. If I would have bought this, my stop would have been a close under the 100-day moving average. So that's why I did not take that. I didn't like the risk to reward. Gold, you know, it had that huge move upwards. We're fooling around here with the 1 ATR channel. So really nothing there. Again, like a lot of the other stocks, I want to see it come into the value zone. Get a V1, V2. Like we had the entry back here on May 30th. It was in the value zone. We had a 520 crossover like I just talked about with silver with AGQ. It's the same signal. We triggered a fractal. So we moved up nicely from there. We phased out up to about here. So that was a good trade, but I want to see this come back into the value zone. Google, oh boy. So I did buy Google. Actually, we did buy Google here on a, what did we use for that? Yeah, the 1030 SMA cross. That was not mechanical. It was a discretionary trade, but I used the crossover as my entry. Did move up, rejected the 200. I got out, took a 1-day profit. The next day, it moved up above the 200, took out the fractal. I did enter, and then it reversed immediately on us yesterday. So that's how it goes. Today, now, it's closing back. It looks like it's going to close back above the 200-day moving average. I don't think I'm going to take this one just because this high is up here. I mean, you could, you know, buying above the 200 works well, but I don't like the range that it had to come back from, and it stopped right at this downward sloping 50. So I'm going to let Google go. Goldman Sachs, open down, reverse back up, nothing there. Here's a good example. This is what we wanted to happen on Google when we closed back above the 200-day. We took out the fractal, and we had a great 2-day trade to the upside. I got out of it when it rejected the 70 RSI. All right, IBB. Well, this is what Mount Doji wanted to look at. You know, this concerns me. You know, when I look at a chart, I generally, my nervous system kind of just tells me quickly whether I like it or not. You know, we did close below the 200. We closed back above the 200. What I don't like so much about this is, look at the volume today. The volume is nothing compared to the down day. I mean, we're back up. You could take this Mount Doji with a close under the 200. You certainly could. You certainly could. But I don't like these two monster big bars down on this monster volume. So Yeah, close above the 200. You could use the 200. The risk to reward's okay because your risk is at least probably up to the third ATR channel or that previous high. So you have more reward to the upside than you have risk to the downside. But I don't like the volume, the big volume on the way down, the small volume on the way up. Intel. Yeah, nothing really on Intel. Russell, we talked about. Coca-Cola. Nothing here today. We're back in the value zone, which is good, but we need a V1, V2 setup like we had back here when we entered long on July 1st. We moved up, we came back down into the value zone, we moved sideways, we had a V2. Here's day 1, day 2, day 3. Day 2 washes out, day 1, day 3 closes above day 1's close. We did enter it here, was a 2-day trade. I did exit it there 2 days later when it rejected this previous this new high and closed back in the range. So looks like that was a good decision because we're down substantially now, but we're back in the value zone. We need to let these bars move sideways. All right, Lockheed Martin, boy, is strong, just strong. It's a 69.94. There's really nothing I can do with it here, but again, I want to show you an example of a good V1 trade that we took on this. We made a higher high, we came back down, the bar settled down, moved sidewards. Day 1 washes out day 2, washes out day 1, closes above day 1. This was our entry, and we wrote it right up to here. MasterCard is too high, nothing there. 3M getting beat up today. Yeah, nothing on 3M today, although it's at a 36.23 RSI. It is at the third ATR channel. I'd like to see this be able to go under 30 and back over 30, go under the third ATR channel, back over the third ATR channel. So that's what I would be looking for. Merck back in the value zone. Need to see V1, V2 setup. Microsoft lower high. This is lower than there. Again, back in the value zone. Nothing there for me today. Netflix, a bit of a kangaroo tail up here at these higher levels, so nothing there. Nike, tested that third ATR channel. I would imagine that we might come back down, see if we can hold here, but nothing on Nike for me. Philip Morris, we did enter Philip Morris here when we had that clean break above the 200. The next day went way down, closed back above. Next day went up. We did hit one profit target yesterday and it closed below. So I did get out yesterday when it closed below. So it just took a smaller loss on that. Good thing we did. How's our PayPal holding up? Pretty good today. So one profit target. The Qs, nice big day on the Q. Nothing here to buy. Again, this is an example of closing below the 200, being out of the Qs, closing above the 200, staying in the Qs, and that's exactly what we did. We bought here. I didn't know it was going to go this high, but what I did know is if it closed below the 200, I would get out for a small loss. But in case it did go my way, I would be patient with it, and we were patient. We phased out, moved sideways, phased out some more, moved sideways, and got out, I think, right about here. Exited that full position. So that was a wonderful position and being patient. S&P, so we did take that loss on the open. Gonna buy that again today. Look at Square today, guys. Holy smokes. I was watching Square. I wanted to see it come back and test that 200, but it never quite did. It did get back into the value zone. Did trigger a fractal here, but I didn't get that today, unfortunately. But anyway, huge trade. I hope somebody has some Square. SSO, again, we're just at these high levels here, nothing there. This is a good example of when we go under the 30, back over the 30. RSI, we go under the third ATR channel, close back above the third ATR channel. We did buy that there. Our theoretical loss was very small, and this was a great trade that we phased out all the way to here. I point that out because it's similar to VIX. Under the 30, back over the 30. Under the third, back over the third. AT&T is too high. Bonds all over the place. Nothing there. Tesla moving back into the value zone. We might take a look. UNG, nothing there. Oil, nothing there. Dollar rallying strong, but it is up against the third ATR channel, so we'll have to watch that. Visa, just moving along. VIX, we have with the close under the 30, back over the 30, under the third ATR channel, back over the 30. Verizon, we will be, that is our loser today. We will be getting out of that, although we did get the dividend today. Energy, up today, nothing there. Financials, big move down, reversal. Real estate, nothing there. Utilities, not much there. And healthcare. So what does that leave us with today? And I'll get to your guys' answers and questions and your comments soon as we figure out what we're doing here on the positions. So right now, AGQ 2401 on the 2024 on the 5, so not there yet. Nothing on Alibaba. Chevron, nothing. So it looks like the only thing that I'm going to be buying today is a half a position of Etsy. And possibly AGQ. But this is going to have to move. So, all right, so we have 10 minutes. Let me take a look real quick. All right. Oh, JT, you're talking about options. Okay. Yeah. You know, sometimes I write spreads on options, but I honestly, I like to focus on one thing, and that's selling puts only. Just my preference. Doesn't mean it's not a good idea. But when the market closes, we'll look at that a little bit closer. Dr. Jorgen says, how is Ross today? Oh, yeah, let's take a look at Ross. It's up again today. Bruce alerted me to this trade back here. And I was like, oh, yeah, it's not on my watch list. It's kind of like with Mount Doji with Twitter. They were good. They were good positions. Good. Here's a V2. Yeah, good call, Bruce. Really good call. All right. Steve says, gaps give clues to trends in the direction of the gap. When they fill, they can create a second chance to get in the direction of the original gap. That's right. That's exactly right. Mount Doji says, good catch on the volume. Yeah, I just didn't like the volume on that, Mount Doji. So, all right, let's take a look here. So, silver's going to be close. Etsy, I'm going to buy 1/2 position. Let's take a look at the weekly real quick. Yeah, I mean, on the weekly on Etsy, we do have some room to go until we get to the 1 ATR channel. So that is pretty good. Just because of this big bar, though, I mean, somebody took a full position, I wouldn't blame them. I mean, based upon the crossover across all the moving averages. But I'm going to go ahead, look for a half position. I'm going to look to see if we have a little backfill. I'll probably add the second half. All right, so, okay, I've got my order in to buy the S&P at the end of the day. Both of those. All right, so IWM's positive on the day. PayPal, get up there, hit that second profit target. SPY, going to be buying that at the end. VIX is fine so far. And then Verizon, going to have to go ahead and exit that trade there. Let me take a look at the intraday on Verizon quickly. Ooh, big strong bar. Look at that. Big strong bar. V1 on the 39-minute channel. So I'll wait a little bit closer to the end of the day. Maybe we can turn that 77 loss into a little bit less than that. All right. $24.24.
Order partially filled.
Okay.
Order filled.
So I'm going to go ahead and get rid of Verizon.
Order partially filled. Order filled. Order partially filled. Order filled.
I'll go ahead and buy my 1/2 position of Etsy.
Order partially filled.
All right.
Order filled. Order partially filled.
66.82.
Order filled.
Is our entry price on Etsy. 66.82. All right. And the plan with this is if it does come back and backfill, maybe test this 200 or this 100 day, staying above the 50, testing it, closing back above, I would add the second half. But again, this is kind of a large bar, and I just prefer when we have those big, huge, large bars to take a half a position and maybe get that second half position if we get some backfill. And if it continues to just keep moving up, then that's fine too. All right, so Etsy's taken care of. AGQ 2401.24. So I'll get that queued up just in case. All right, so we'll just have to watch that, but I don't think so. You know, SLV, Mount Doji, I was basing this trade off of the AGQ, not off of the SLV because of the double leverage, and it does backtest a little bit better. And the SLV, the 20, is already above the 5 is already above the 20. Now we're at 2402, 2401. Yeah, I don't think this one's going to go. I'll look at lifts just as soon as the market closes, JT. We'll get right to that. Hey, hey. Looks like it's going to be a green day for us. That's nice. We're hovering on just red most of the day, so this is awesome. So I don't think AGQ is going to trigger. So yeah, the only thing we bought today was Etsy. Right here, 66.82, and then of course, as soon as the market closes, my order will go through and buy the SPY for the overnight SPY trade. Look at IWM go. All right.
Order cancelled.
All right. So the order on AGQ did not trigger because the 5 is still below the 20. So were we green on the day? Yes, that was good because we had a couple red days. So always happy with that. Let's see what our new Etsy position is going to do. But real quick, Mount Doji, on silver, the 5 was still above the 20. The 5 EMA was still above the 20 EMA, so it didn't. There's no reset. You'd have to have the 5 go under the 20 and then back over to reset you back into silver. So the AGQ was different. But you know, silver did have a decent day here. It did hold at the 200-day moving average above the 51, above the 50 RSI. So yeah, so not bad at all. So anyway, we got rid of Verizon. That was our stinker on the day. Let's go ahead and look at that Boeing trade again. So I want to say what Jay. Sell the 330 put, buy the 430 call. Yeah, you know, you certainly could. It's just I'm not a fan of buying options. You know, the time decay, the premium that you have to pay. You know, there's a lot of things working against you as options. I mean, look, there's a lot of people that do well with options. It's just my preference, JT, is I really like to just kind of focus on one thing, which is selling the puts. But you know, not a bad idea. I mean, you're saying here to buy the 340 calls. Yeah. So I actually think, you know, I'm going to take a look tomorrow and I'll see what just selling that put at 330 pays. But, you know, I would not mind buying. Let's see what this looks like on a weekly chart. See how that 330 lines up nicely on the weekly with the 100. So that's what I'm talking about on multiple time frames. Not bad. Yeah. I mean, the 330 lines up close to the midpoint of the ATR channels and the 20-month moving average. The weekly lines up at the 100-week moving average, and the daily 330 lines up at the 30 RSI. So yeah, not too bad at all. So I may enter that tomorrow. All right, let's take a look at Lyft for JT. Oh, hey, I guess I should say before we get into this, just a quick little plug for me, but I do offer private one-on-one coaching, mentoring lessons in the evening time via Skype. So I've done really well with my clients. I've really turned them around, taught them a lot of things. So if you feel like your trading could use a little personal attention, you know, reach out to me. My email's in the description of this video. My hourly rates are in the description of this video. And, you know, it usually starts with a phone call. Free phone call just to get to know each other a little bit better. I want to know about your trading, what issues you're having, what your goals are. And then during our sessions, I'll put together a personalized approach for you, a trading plan for you that fits your goals and your personality and your availability and all that kind of stuff. You know, it's important. People say they want to be traders. It's important to know what kind of trader. There's lots of different traders. I mean, you can trade intraday, you can trade a million times a day, or you can be a swing trader, or a position trader, or a trend trader, or a long-term trader. It really, I think the best one is the one that fits your lifestyle and fits your availability. You know, some people, I can't sit in front of the computer all day. I can't even sit in front of the computer 1 hour a day, but you know, maybe something longer term crossover approach, something like that would more fit your personality. Or if you want to trade like me, I spend a couple hours analyzing the market, and then I trade in the last hour of the market. So it's about 3 hours a day. And then the stuff I do at nighttime is about 4 hours a day. So it's about a part-time job. But, I have a lot of people say, well, I want to trade just like you. I'm like, do you have 4 hours? And if they don't have 4 hours, then they're going to have to do it a little bit differently. So anyway, if it's of interest to you, let me know. You can reach out to me on my email and also on Twitter if you're interested in lessons. And then if you like this channel, if you're learning something, please do me a favor, hit the thumbs up button. It does help to grow the channel. And there's a lot of people out there that need help with trading. There are a lot of people that lose money. And the reason I started this channel is I really, honestly, truly want to help people become better traders. And improve their lives. So help me do that by hitting the thumbs up button. So, all right, sorry about that, JT. So let's get over to Lift. So Lift. Well, we did have that nice bounce off of the 50-day moving average. I don't think I personally would have bought it here. I think I would have rather had a close below the 50 and then back over the 50, although we did have a V1 here. Lift is not on my list. This would have been a possibility, actually. Normally, I like to see these close under and then back over, not just the test and then back over. But this V1 here would have added some brownie points to that trade, and also that it went under the 50, under the 1 ATR channel, and closed back above. So it would have given you a pretty good risk to reward ratio with the close below the 50-day moving average, and your profit target's probably all the way up to here. Would I buy it here right now at a 51.58 RSI and it's above the moving averages? I think personally I wouldn't, but that's just my nervous system telling me. Just looking at the chart and the thousands and thousands of hours that I've looked at charts. I mean, logically, it could be fine. I'm just not sure where I'd really want to put my stop here. I think the 20 and the 10 would be a little tight. And we had these big bars coming here, so it's okay. I mean, if you wanted to take this trade, I would probably, like, if you wanted to have it long term, maybe you could use the 50 as your stop and hope for a 2 or 3 times to the upside. That might be one approach. Another approach might be a close below halfway of this bar. I think a close below the 10 and the 20 would be a little too tight on this. So, if I was taking a longer term position on this, I would be targeting the 70 RSI and a close back below the 50. If I wanted to be a little bit more active with it, I would target a 70 RSI and a close back below halfway of this bar. William says, hey Greg, do you also wait to add to your half position till the end of the day, or will you be adding intraday like Etsy? That's a good question, William. It really is a good question. And I think you could do it either way. I guess my preference though is at the end of the day, because it makes me feel, I'm a big believer in the importance of the end of day prices. So I think the end of day price is going to give you better data on entering that. But a lot of the times, I'll give you an example. On Verizon, right? I took a half position. Look what would have happened if I would have bought it intraday. If I would have added intraday, see what would have happened? Boom, right? But there's going to be, so it's good that we waited. Not only did not add a double position, right? But actually got us out of the position. So, but sometimes it's going to work for you. Sometimes it's against. Sometimes it's going to come down here intraday and then head right back up. And you're like, oh, I wish I would have bought it halfway. But there's just too many variables for me. I like to really keep it simple, and it keeps things simple when you say, okay, it's going to do whatever it's going to do intraday, but I'm just going to base it upon the close. So I hope that helps, bud. 13 people watching right now. We should see 13 thumbs up. Come on, guys. Thanks, Scott. Appreciate that, man. Appreciate that. I will pay you later. No, I'm kidding. Mount Doji says CRM had an interesting day today. Let's take a look. Yeah, that is kind of interesting. You know, we made this low, we came up here, and then we failed, usually because the people that finally bought down here, the bulls got control of this, moved up. Then when it moved down, a lot of people that bought here sold here. That moved it down. We did create a V1 today, not a very good one because it did not wash out yesterday's low by very much at all. So it's a little bit of a subpar on the positive side. It is a bullish engulfing candle, which means the low and the high of this bar are lower and higher than the previous bar. So that is positive as well. Did take out the 5, did take out the 20. MACD's positive, and it did close above 50 RSI. Let's take a look at the weekly. It's always important, guys, to look at your possible entry in the larger time frame and see if you can divine something. Well, look, this stock is going to move one way or the other. I mean, we had this big bar. We've had all these inside bars ever since then. This thing is winding up like a watch. I mean, it's winding up. It's going to move one way or the other. It's just that we don't know when, and we don't know what direction it's going to. So, and we also have this lower high. You see how this high is lower than this high. So that's a little concerning. But there's really nothing wrong with it. I don't know. Just in my opinion, there's just something about it I don't like. So I know that's not very helpful. But if I had a better V1, V2, it would make me feel a little bit better about this. The volume was high too. So did you take that trade, Mount Doji? You're welcome, JT. Thank you so much for coming by today. I want to take a look back at Twitter. Whoa, nice, Mount Doji. Did you phase out of any of that, Mount Doji, on Twitter? Yeah, so a lower high. Let me see if I can find a good example of a lower high in regards to a V1, V2. All right. Mount Doji says, I did not take the CRM trade. I was too confused and did not see enough to pull the trigger. Well, good. That's about how I feel too. Okay, so Mount Doji, we talk about higher lows, right? We know higher lows can be a positive thing, but a lower high can be a negative thing. So, okay, here we make a new high. We come back into the value zone. This is where we want to look for a V1, V2 trigger, right? Because things go above value, back into value. Then we want to target, the 70 RSI or that previous high. If it comes into value, then goes up, then comes back down, now you have a lower high above you. So Kerry Lavorne, who taught me the V1s, V2s, as long as you have a higher high and you come back in, you can take them. If it goes into the value zone, moves up, but then comes back down, so you have a lower high, he will not take a V1, V2 at this point until it goes back and washes out that first low. I know this is a little confusing, but on like Coca-Cola, here we made a higher high and we came back into the value zone and we took our trade. That's okay because this is a higher high. Here we made a higher high than that. So if I get a V1 or a V2 back into here, I'm allowed to take that trade. Let's just say that right here, let's say this did not go higher than that. So it's a lower high. Then, like, let's just say it went to here and then came back down into a V1, V2. Technically, I'm not allowed to take that trade until it washes out that previous low. So basically, lower highs are formed when you have a higher high before it. You attempt to go up, but you can't quite get there. You know, that shows some weakness. And then if you have a V1, V2, now you're up against another range above you, like on Beyond Meat. If I took a V1, V2 here right now, see, I have this to contend with. Does that make any sense, Mount Doji? Is there something specific that you'd like to look at with that one? You're welcome, bud. You're welcome. You're welcome. Yeah, there's a lot of moving parts, right? Higher lows, lower highs. You know, lots of different things, but you know, it takes a while to kind of get it all processed, and you know, so when you look at the chart, you know exactly what's going on. But if you're going to take a V1, my advice to you is look and see if there's a lower high above you. Oh, and in our SPY, let's see where we got filled on SPY for tomorrow. $297.19. All right, there's our new entry for the overnight SPY. All right. Well, congratulations on that Twitter trade, Mount Doji. That was really, really great. I'll try and find more examples. Okay, great. Yeah. All right, everybody. Mount Doji, JT, and William, and Steve Burns, and Dr. Jorgensen, and Johnny, and Andy, and David. Thank you, everybody. And Scott Montgomery. Thank you, everybody, for showing up today. I do appreciate it. If you have any other questions, feel free. You can email them to me, or you can send me a message on Twitter, and I'll do my best to write you back. So, all right. Well, nice, slight little green day today. Oh, wait, JT says, same here. I'll scan for some more examples. Yeah, good. If you guys ever have an example of something that you're not quite sure about, just send it to me. You know, or bring it up in the chat, and I'll do my best. Thanks, Scott. I'll do my best. So, all right. Well, listen, thanks, everybody. Have a good rest of your day, and then hopefully we'll see you tomorrow during the last hour of the market. So take care, and thanks for spending your time with me today. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only.
Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.